like I said, I'm gonna keep both chats open, but I don't mind if it's in here. You know, this is easy. You can do either one. Yeah. Well, exactly. Okay. Um, yeah, that's fine. All right. Get the trigger pulled. And good morning, everybody. Steven Salvatore here. Morning market moves with Upswing and me. So much to talk about. Again, what else is new? We got GDP numbers came out. Tesla earnings, a conference call with Elon last night that was absolutely beautiful. For those of you that are Elon fans, like I am, you would just love the conference call. He's very proud of his company. There's been a lot of shit talking about Elon, which is ridiculous, obviously with the Twitter stuff. But Tesla right now is putting up record-breaking numbers, according to Elon. And you can see the numbers; they're right there. I suggest anyone who's a fan, you can listen to that conference call. It's long, but there's some good points. They're going over it on CNBC and all the main media outlets right now. I'm going to go over some of it too, but Tesla's just doing really well, and it's outstanding. And between that and the GDP numbers, again, as I was talking about yesterday, we are testing 200-day moving average on the NASDAQ. Right now, the 200-day moving average is, well, damn, we're less than 50 points away from it on NASDAQ. And we have surpassed the 200-day moving average on the S&P, as you can see on my screen for those of you who are watching the simulcast. So, breaking point right now. We're right there. We're sitting right there at the bubble, which, it's a great time to be in the market. It's very exciting stuff. But the question is, and the question always remains, which way is it going to go? What is going to happen? So, January was a good month. So I believe the S&P is up around 5%. You can correct me if I'm wrong in the chat or whatever, but I believe the S&P 500 off the top of my head is up 5% in the month of January. Question is, will that be pulled back a little bit before the month ends? Highly possible. We do see that happen a lot, just how institutions manage their money. So that's a possibility there. But in any case, let's see if the trends here continue. So, as promised, a lot of you have been asking for me to do more stuff on options. Obviously, that's, I'm going to be doing a lot of options. This is the main theme of the show, and what we do over here is going to be doing options analysis and teaching that so people understand it. Right now, what I'm going to do today is we're going to take a look at Tesla. I'm going to pull up a bunch of stuff on Tesla right now. So let's get started with everything that went down with Tesla. And I'm going to go ahead and also pull up all the charts for Tesla as well. So when you're doing It depends. It depends. So, I have in Discord right now, I got a couple guys asking about, do I frequently use screeners? Absolutely. 100%. Screeners are great because screeners, they will pick up things that you're just not going to see. It would take you hours and hours and hours to just maybe see these patterns, where screeners these days, you can plug in patterns, which is great. And with Benzinga Pro, it's great. You can actually program customized patterns that you can look for. And TradingView do that to an extent too. So it's really important that you use these tools, especially with options. The one thing I wish they had, which, if someone knows of this, let me know, is something that with options analyzes the spreads on a screener. I've yet to find one that does that. I'm pretty sure that there's a couple out there, but it's bar chart, optionistic. One of those might offer it, but that's important too. But oh wow, look how low the VIX is. So we see this low VIX. Oof. Wow. Wow. I think the market's gonna fly. I really do. But let's see here. So, all right. Well, so much going on today. It's like hard to keep up. It's like every time I look, I'll glance over at something, and it's just holy Jesus with the news. It's so much. Yeah, it's just. Yeah, market's definitely in blast off mode right now. There's no doubt about that, and as it should be. So let's go ahead and check out Tesla. So Tesla had their earnings call. Good numbers, good guidance. Obviously, Elon's a very popular guy, and the stock was kind of getting beat up for a minute there, and it took a well-deserved jump in the after hours. Pre-market now, Tesla looks really, really good. So with that being said, let's go through my process when it comes to picking options. So let's start out simple. Let's just start real simple. I'm gonna pull up the chart here for Tesla just to have this ready on deck. We'll do an hourly. Hourly is a very popular chart for me when I do options. I like doing the hourly. Generally when I do options, I try to do 1 to 2 day and 3 day swing options. I do the quick ones too, but with a lot of options, you really do want to do swings because of the spreads is one reason. You want to let it mature and give it a chance to really move. So it's nice to do the 1 2 day swings, sometimes 3 day, 4 day, weekly. So when I go through, let's see, so we're almost there. Let me just pull up. I'm gonna go through E-Trades probably. I think, in my opinion, anyone who is getting into options that's looking for a broker, I think that E-Trade and like Power E-Trade and all their software is great for options. One of the best out there. Webull's not bad either. Obviously, Robinhood's super easy, but it's almost too user friendly to an extent, which can make things difficult. So, all right. So when you're picking options, so I'm gonna go ahead here. Why is this not giving me information now? It's gonna make me nuts. Holy crap, why is this thing going slow? When I do the show, suddenly my internet gets slow. What are the chances of that? Are you serious right now? This has to be a joke. Has to be some kind of a joke on me right now. I'm literally like telling you that E-Trade's great and their servers like for, there we go. All right. Yep. So here's E-Trade. This is just like their Power E-Trade Pro. So when you're going to look at options, so you would put in Tesla. Here's all the information on the stock, and you go to the options area. So here's the first thing that we're going to get. So you're going to see a bunch of stuff here. If it's your first time looking at options, it's going to look really confusing. So you've got these dates up here. So the dates represent the expiration of those options contracts. So just remember, just off, down to basics, an options contract, one single contract represents 100 shares of that stock that is reflected on that option, just so you understand. So it's 100 shares. So if you buy one call option, that is 100 shares of that stock. So the dates here are the expiration. So at 4 p.m., well, it's actually 4:05 p.m., I think it is, when options actually expire. But at 4 p.m. on that date, the option will expire, and that's it, it's done. So if you still own that option, okay, and it's whatever it's worth, it's just going to get liquidated at 4 o'clock, essentially. Everyone says, oh, if you still have it, you got to cover it. Or no. But let's get all the BS out of everything first. First of all, you're essentially buying and selling the premium when you buy and sell an option. Unless you are to exercise an option. And no one explains this well. It drives me nuts. It took me an extra 6 months to understand options because no one ever explained this to me properly. And you just kind of figure it out. It's common sense for the most part. But an option, when you're buying and selling it, unless you exercise it, and exercising it would mean you're covering what the option actually is in buying a stock. So if you buy one call option and you exercise that one call, that means you have to buy the 100 shares at the contract price. So that would be exercising it. So, if you never exercise it, that means you're just going to buy and sell the option, which means you're just buying and selling the options premium, which you can obviously significantly profit off of. That's how options traders make money, is they buy at this premium and they sell it at a higher premium, whether it's a call or a put, whichever market direction they have chosen. So for trading purposes, we will discuss options as if we are never going to exercise options, which we are not. I have never once ever exercised an option. I've been trading them for years. Never have I ever traded or exercised a single option. So let's just get that out of the way so everyone understands that we're just talking about buying and selling the premiums. As far as the premiums are concerned, okay, when I explain this going forward, premium is what the option is, what you pay to buy that contract. So if you buy one call, so we look up here on the screen, so you've got strike prices in the middle, and that's the price it has to go through in order for the option to be exercisable, to be really worth anything. It's just going to continue to decay if it doesn't reach that strike price. So right now Tesla's at 144. So as I've discussed before, I generally buy in the money options, at the money, around the money, but for the most part, right in the money. So I would probably buy the 144. If I were to be trading this right now, I would be able to buy the 144 calls. So as you can see, when I pull up my ticket right here, one option, okay, so it's right now it's trading at $6.40. Okay, this option, the 144 calls that expire on the 27th, which is tomorrow. So I'm generally buying short-term in the money options. Expires tomorrow. Costs $6.40 for 100 shares. So that means if I were to buy one option, one call, it's going to cost me $640. If I were to buy 10 calls, be $6,400. So I'm controlling 1,000 shares for $6,400. Okay, so instead of, it would cost me $144,000 to buy 1,000 shares of Tesla. Instead of doing that, I don't have to lay out all that liquidity. I can go ahead and for $6,400 control the same amount of shares. And if a stock goes up $1, I will get that same $1,000 profit from the option instead of laying out all that money. So now my percentage return is obviously much higher because 1,000 and 6,400 is 15%. So that's obviously significantly higher return than $1,000 on 144,000, which is, you know, 0.5%. So that's why options are obviously favorable for investors. They're also a great way to hedge. So, you know, you could, you know, if you're heavily invested in something, you can buy options against it to insure yourself at a cheap price. So it's like buying insurance. You know, let's say you own 2,000 shares of Tesla. You know, it's a $300,000 investment right now. So you could, in theory, you know, let's say you take $10,000 a year and buy put options against Tesla. That's insuring you. But again, you got to do the math on a risk versus reward, because obviously if the stock's not running 10% a year, then your premium's just costing too much and you're killing your returns. But, you know, if you look at the options that are out there, there'll be math that works. You might give up a couple points in insuring yourself, but you can do that. And a lot of big portfolios do that. Generally, the way to do it is to day trade them throughout the year, you know, against your positions. You know, when your portfolio starts lighting up, trade against it, and and then maybe either buy more, rebuy when the market turns back around. But in any case, that's how we do it. Now, we talk about deltas. I talk about the Greek values, and the Greek values are very important, as is the open interest. So we look here. We see, where am I at? So we still got 15 minutes left. Making sure we have enough time. I'm always running out of time. But let's go ahead here and look at the open interest. The 144 calls, 5.1K. So that means there's 5,100 144 calls that expire tomorrow out there in the liquidity pool of owners. 5,100 contracts have been printed. That's total. We don't know how many, you know, are being sold right now, but that's how many are in existence. And then you look at the volume, and that number right now is 0, but that will pop off once the market opens, which is at 9:30. You can only trade options from 9:30 to 4 p.m. during market hours. You cannot trade options during market hour or after hours. And then next, you know, now the other thing too is people ask about leverage. You know, margins are in theory leveraged in themselves. You know, instead of going out there and buying shares, you can just buy the option calls, you know, for obviously significantly less. So you get a higher return, laying out less money. And that's the whole point with options. So if I were to have bought Tesla calls, or if I were to buy Tesla calls right now, that's how I would put my order in. And then if you decide to sell it, again, you're reselling the premium back into the market. Now, when I tell you about, you know, so there's companies out there like Market Rebellion, the Nigerian brothers, what they do as one of their main pieces of market analysis, and this is phenomenal. If you're a swing trader, I feel like you have to be doing this. You do all your technicals, okay? You do all your technicals on your charting. Okay, so let's say you do a Tesla here. Obviously, we're super bullish right now on Tesla. Wow, look at that. It's due for a pullback. You know, it's definitely going to be due for a pullback here. You know, it's getting all this hype is popping up right now. But, you know, we're probably going to get from this range here, probably going to pull back-ish, you know, to this kind of area. And then it's going to get to a new support level, and then probably rebounds again as the market continues to stay healthy this year. But what we do in the meantime is we go ahead and we make that play. Now, as the market conditions change, we will look at our options for information. So we clearly have all of our technical analysis that we do. And then as an addition, we're going to look at the numbers with the options to give us some extra additional information. So what information are we looking for? So typically, the first place you want to look, so once you understand options, you go down the list. So let's say 144 calls, okay, the one that we were just looking at, that expires tomorrow, the 27th. Okay, now I'm going to explain where the expiration dates become important here too. So these expire tomorrow. So this information started months ago and is now coming to its head now. So you got 5.1K open interest on the calls, 9.2K open interest on the puts. Okay, so that's heavier on the sell side. So if this option contract was expiring in a couple weeks and I was looking at this, I would say, wow, the consensus of institutions are saying, are buying. I mean, these are real purchase contracts. This isn't just analysts talking on TV. This is actually real money. Follow the money. Well, this is what we're doing here. We're looking to see what's more popular. Is it the open interest here? Hold on, let me show you here. You got open interest here, 11.6, or the 9.2 and 5.1. So it's telling us that the banks and the investors think that Tesla's going down. Now, I'm not going to use this contract as an example because it expires tomorrow. So this is open interest for months. So for a while, Tesla was getting beat up. So of course, yeah, their puts were much more popular. But now if we go down, okay, we'll get rid of those. Let's get rid of those. Let's look at the March 3rd 144s. Now look here, let's see. Let's look at, let's look at the 145s. So the 145s, look at this, 915 contracts versus 471. So 145 calls are very bullish now. All of a sudden, you know, that number's starting to form. And then we'll look at one with some volume. So you want ones with volume, obviously. So you got the 150s. They just picked up a lot of action. They're sitting here, and it's 1.2K versus 251. They're getting popular. The 155s are getting popular. So you got a lot of calls now starting to get very popular. Wow, unbelievable. So anyway, you know, you take these numbers and you use them. You know, you can write them down in a chart, make your own chart, whatever. But you can let this be just another, call it an indicator. Now they actually have indicators do that, believe it or not. I think they call it the call put volume. Call put ratio. Yeah, they call it the call. Let's see, what's this one is. That's interesting. Yeah, so you know you got a call put ratio. Well, I mean, I'll try these in my back testing. I'll find a good one. Okay, for right now, I'm just gonna do a basic one. Call put ratio. Let's see what this one is. Yeah, so this is just like a basic call put ratio right here, and what this is telling you here essentially is the calls versus the puts and how important that is. So it'll give you like kind of like a rolling indicator of, you know, which way things are going. If the calls start getting heavy, they're buying more calls. That means it's a bullish signal. It's real money. Yeah, it's just like volume, but it's the options version of it. So it's just more information. It's not going to be dead on accurate. It's not going to tell you exactly. It's not going to be right every time, but it's going to feed you in your technical analysis. So, for example, if you do all your technical analysis and all your charting, and you're feeling very bullish about something, you know, a stock, in the coming weeks that you might be taking a swing trade on, and then you pull all the options data, and all the options data shows you that it's significantly on the call side, well, that might be like a confirmation for you to say, okay, yeah, let's go. Let's pull the trigger here on this options call and take a position. So it's just something in addition that you can do on top of your technical analysis. And I highly recommend, what I'm gonna do is I'm gonna post something on it too. But they have some good, like this is a decent, the one I have on the screen now, this is just a put call ratio basic one, which will work fine. You know, you can see as the market goes down here, it was kind of working with the volatility, but it gets pushed down, beat up, you get a lot of calls, you know, it's showing that you're hitting a support level, you know, and then you can use it against your charts and other indicators and see if you find any divergences, you know, and that's just another indicator to add to your arsenal. But this is a big one because it's real data. Okay, so it's real live data. You're following money, especially with the big stuff like the Teslas, where you got big institutions that take big positions, you have a lot of volume. This is a good one. This is a good one when it comes to all this. So we're 2 minutes away. I'm going to sign off. The bell's about to ring. Let's see what happens here. Looks like the market, we're going to have another solid day. Market's already up significantly. We should have a beautiful day today. VIX is down, market's going to run, I'm telling you. But watch your pullbacks, watch your indicators, watch me. I will be trading live. Over and out. Keep the questions coming, keep the comments coming. I will respond to everybody, I promise. Thank you very much. Signing off. See you guys tomorrow. There she goes. Wow. Look at that friggin' thing around. Crazy.
Time you're on a tech call, like IBM, like, oh, okay, well, they're laying off 3,000. I mean, of course they are. All the tech calls, except of Bill McDermott of ServiceNow, we just heard, are calls of gloom. Now the packages are terrific, and you might say, well, those people they're not really unemployed. They're just, they're surfing. But I would say that this is if there is going to be a slowdown, it's concentrated in an area that has been so strong and bid up so many engineers that they actually may impact the economy. And people don't think that's right. When I mention that, they don't realize that 27% of the S&P comes under the purview of this kind of software, and enterprise software is so bad. Yeah. It's so bad. That's why what people are like, is McDermott not laying off people? Doesn't he know what's going on? Well, McDermott has a product that saves people, saves costs for companies. But there is no doubt about it that there's a gigantic pause on spend in tech. Gigantic. And then, I mean, let's do this. You know, see, people who are making fortunes, 500, 600,000, the layoff package of that. And then you have Chipotle. And Chipotle's got to find the 15,000 people because it's burrito season, of which, by the way, I wasn't quite familiar with. I thought it was still football season. I didn't know it was burrito season. But there are some lower paying jobs that they're probably going to struggle to find. And then you just have someone from Alphabet who doesn't get hired or gets laid off is not going to work at Chipotle. But they don't have to because they have such a good severance package.
For now. Yeah,
for now.
As long as it lasts.
Yes.
Your point about IBM's good. Stock back to 136. That's going to take you back to November. The software revenue was ahead, and the FX neutral revenue guide was in line, but there were comments from Krishna about the back half of the year and what happens if things do get worse. Take a listen.
What we are seeing is that most of our clients do believe that even if there are some, I'll call them minor or different headwinds in 2023, they are going to emerge stronger. As they want to emerge stronger, that means they're all deploying technology to help offset wage inflation, cyber issues, supply chain challenges, and all the demographic shifts, meaning there's just fewer skilled people to hire. Consequently, we're seeing them double down.
So he's talking about IT intensity, same thing that Dylan talked about.
I mean, a lot of people felt that it's a back half story. A lot of other people felt that the layoffs that were mentioned are for real because they've done enough business. They're actually are part of a broad reshuffling of where people are working within IBM. The stock has been a great performer, so it's coming in a little. It wasn't a bad quarter. Is it a great quarter? No. It's very typical, by the way, of a lot of the software quarters. Now, they have this Red Hat, which they bought, and I think it's looking okay, and it's giving a hybrid cloud strategy. But it mentions the word cloud, and if it's got anything to do with the cloud, then it seems very yesteryear. Like everybody who wanted to get on the cloud is on the cloud. Now, actually, that's not true. But that's where the market's taken at this point.
Right. Chips today, whether it's STMicro, Seagate's leading the S&P at the moment. We mentioned the call on NVIDIA over at Credit Suisse looking for gaming rebound in the back half of the year.
I know this is insane, but the best call of last night in terms of understanding all of tech was from Tim Archer, who is the CEO and straight shooter at Lam Research, which at one point was down. It's LRCX was down 20 at one point. They announced gigantic job cuts, but they don't, really a lot of job cuts. But what they've said is that, look, this inventory glut that we've seen in semiconductors, well, they're producing the fewest DRAMs that they ever have, basically, as a percentage of inventory. They make the equipment that you need in order to make semiconductors. 7% workforce, 1,300 jobs layoff, but $2 billion out of sales in China ended. Just ended. The U.S. government took it away, and yet the company is still humming. And yet, if you want to know, I bet you Micron is up nicely now. It should be up nicely. See if the market's rational at all.
Well, STMicro is almost a 52-week high. And I can't remember the last 52-week high we had in chips.
No, it's hard to find. But yeah, anybody who makes chips and had an inventory glut had to like what Tim Archer had to say, which is, look, we don't have a lot of orders. We make a ton of money, and the orders cut back dramatically because everybody realizes, wow, we can't end this glut. But he did say, look, the glut in DRAMs ends eventually. Those are the basic building block commodity, because when you do something on the cloud, you do have to store it. So he was, I have to think he's very, very good, and it's a really well-run company. The fact that they can make so much money when the government says, listen, you're done with a sophisticated China product, including, by the way, the Adelants.
Market just keeps on going here.
I know that Tim,
We're
listen,
about to pop a Heisman
we're
day.
shilling for America.
No, I mean, American corporate dynamism is what we're all about.
Yeah, I mean, look, this company sells 14 ton surge. It generates a huge amount of cash. They basically have no orders in their key product line, and they're still doing well because they do great servicing. When people look at the intellectual property of where we're great in this country, it's land, it's KLA, and it's supply materials. That is a difference maker. So when our government said no to Lam for sending $2 billion to China, that's because if you want to be keeping up with America, you take Lam product. ASML too. So people should read Lam and realize how great we are in this country. That you can laugh with these people, have virtually no orders in your main category, and have the stock hunch.
ASML also almost, let's say, a 10-month high.
Yeah, well, I mean, the semiconductors, it's just another area where I think that, geez, Jay was winning there, and now he's not winning. Jay, I'm sorry. Jay, stay tuned, because we got a real loser coming up.
Easy.
I'm sorry, that was wrong. That was wrong. I was more travel oriented. I had my travel hat on.
Well, we do want to turn to Southwest today. The airline did post a $220 million loss for the quarter following those canceled flights and the scheduling troubles during the winter holidays. Joining us this morning, Phil LeBeau joins us this morning with a very special guest. Hey, Phil.
Carl, thank you very much. Bob Jordan, CEO of Southwest Airlines. On a day where you guys posted a much wider than expected loss for the fourth quarter, $800 million hit from the meltdown, got a lingering impact in the first quarter of $300 million. Do you give us some sense of how much you understand just how mad your customers are about what happened at the last week of the year?
Well, Phil, first, thanks for being here. We're in our Dallas maintenance facility, which is just terrific. But I just got to start with a huge apology to our customers and to our employees. We really messed up that week, and you've got my sincere apologies. If you've got my full commitment, it's on me. You've got my commitment to do what it takes to fix our issues. Our customers are sticking with us. We really inconvenienced them, but if you look at March and beyond, the bookings are strong. Our leisure bookings are strong. Our managed business bookings are coming in strong. So there's a lot of evidence that our loyal customers are sticking with us.
Bob, you say it's on you. I have to be honest with you. A lot of people probably heard that and they say, that sounds like the typical corporate apology. How do I know that the true changes are going to be made? If this happened at my company, somebody is going to lose their job. Something's going to happen. What's been changing to make sure this doesn't happen again?
Well, we already had a very rigorous program in place. One of our top 5 strategies to modernize the operation.
I'm thinking I'm gonna wait for its first pullback, play the pullback, and then go long. Yeah, see, we knew this was going to happen. That's why I don't trade the open. Damn. Can't get into this yet. Close. Waiting for a couple things to line up here. My pattern's almost completed on a 5-minute time frame. Yeah, we might get, yeah, I think we met that 945 as our bottom.
crucial to where you're going to value Tesla anyway within the broader market, and that is this idea of whether Tesla is a car company or whether it's a tech company. So the fact that they did talk about software and that becoming a bigger piece, that recurring revenue becoming a bigger piece of the overall sales pie, when does that happen, and how does that, I guess, go back into this debate?
So yes, it's both. And one of the things I've been watching this year too. If you just line it up with large cap tech companies, let's pull Amazon, let's pull Netflix. There's kind of neck and neck with the returns this year, which kind of points to that. At the fundamental level, they're both a manufacturing company and a tech company. And so I think that the valuation also often gets questioned. It has never been cheaper as a stock than it is right now. And so you have a company growing 50% versus peers that retracted last year with innovative products that we'll learn more about on their analyst day. Whether it's new vehicles, I think that's a big thing because we just had the SX3 and the Y out there. But now the semi, the Cybertruck, and then worrying about their pipeline. Additionally, one of the things that we focus on, I cover solar and renewable energy, is the energy storage business. They have the best quarter they've had ever. The margins on it, the profit on it has increased in this quarter, and the pipeline there is very strong entering in to this year and next year as well. And then all the other things, full self-driving to autonomous robots out there, it's kind of pie in the sky. We don't use any of that in our valuation.
Right. So you have still, the embedded call options on some of the future ventures of Tesla. But in the here and now, Ben, is anything in the results yesterday or in the guidance going to keep the estimates from coming down anymore? I mean, they've been on the downswing. You're under $6 for 2024 in earnings per share. The street's around 6, I think. That's been down from like 7.5 a few months ago. So I guess the point is, when you decide what to pay for it today, are we going to see the actual volumes turn into better profitability down the road? We did have a shortfall in free cash flow, I guess, versus estimates in the latest quarter.
Yeah, David, it's a great question. I think that my numbers, we cut our numbers, and I think many of my competitors cut numbers. Heading into the end of the year after the stock fell, people reined in their price targets. I actually think that there's upward bias for revisions right now. A couple different points. One, we modeled below this 1.8 million units. We're more like 1.7. Elon talked about going to maybe up to 2 million. Depending on the economy. I think that on the Inflation Reduction Act, none of that's been built into direct subsidies for making cells and batteries. Haven't been built into my model, other people's models. That's some upside a little bit in the near term, definitely in longer term upside there as well. And I think that as we see Austin and the Berlin factory really getting to the maturity, they're still early days, that becomes margin accretive as well. And so I think that there is an upward bias to numbers right now after they were slashed at the end of last year.
Right. Ben, thanks so much. A fascinating day at least for the stock. Appreciate it very much.
Thank you, guys. Take care.
As we go to break today, a roadmap for the rest of the hour, including Chevron announcing that $75 billion stock buyback right before earnings, of course. We'll talk about drawing the ire of D.C. Plus, a big interview with the former Barclays chief, Bob Diamond, talking today's GDP number, as well as why he's still bullish on digital currencies.
And the state of freight. We've got an earnings exclusive with new CSX CEO Joe Hinrichs when Squawk on the Street returns.
Take 101. Get their attention.
All of you need to get a grip.
Any way you can.
Oh, I see you hurrying.
Get smart. Watch Shark Tank Sunday through Thursday at 7 Eastern. CNBC.
Nice.
Hey, but what about for existing?
It's the same deal.
Is he okay? At AT&T, we give everyone our best deals on every smartphone. Get up to $1,000 off on our most popular smartphones.
Hi, I'm Jay Jackson. For almost 20 years, Abacus Life has been purchasing life insurance policies from seniors. And in just seconds, you can use the free calculator at abacuspays.com to learn what your policy might be worth.
For many of my clients, selling their life insurance to Abacus was right for them and their estate plan.
Don't sell or lapse your policy without going to abacuspays.com first. There are no fees and no obligations. Get the real value from your life insurance when you need it with Abacus.
CNBC's Equity and Opportunity, voices and visibility for all.
When you're representing a food that's never been in the culinary world, it's very difficult. My name is Crystal Wapupa. I'm from the Kickapoo tribe of Oklahoma. We source from all over Native country. When it comes to funding, I'm taking a huge risk. It's kind of pre-colonial food that meets what's going on in today's cuisine. I am a native, urban native.
Learn more at equityandopportunity.com.
This is Omaha Steaks. This is Omaha Steaks. So's this. And this. And even this. Yeah, this too. There are so many ways to enjoy our guaranteed perfection. Just a little everyday wisdom from Omaha Steaks. Visit omahasteaks.com/TV today and you'll get 8 free burgers. Never tried Omaha Steaks? Save an extra $30 with promo code ENJOYSTEAKS at checkout.
Some things are better left to a professional.
In hindsight, probably shouldn't have tried to remove my own appendix.
Like when it comes to finding financial advisors.
What was I thinking?
So leave it to Smart Asset to find them for you. Take the free quiz at smartasset.com. Then you'll be matched with up to 3 vetted fiduciary financial advisors. To get started, take the Advisor Match quiz now at smartasset.com.
I was this close. This close.
Welcome back to Squawk in the Street. CSX under pressure after reporting results after the bell yesterday. Revenue is up 9%, but volume coming in lower year over year. Shares down about 4% right now. CEO Joseph Henrichs warning on the call that international markets could continue to slow. Here to discuss in a CNBC exclusive, CSX CEO Joe Henrichs. Joe, it's great to have you on the show. And certainly you're coming up on your first full, or this is your first full quarter in the CEO position.
Yeah.
So walk me through the results, specifically the fact that we've seen other freight railroads that have basically be very cautious and suggest that their volumes this year are going to hurt given the slowing economy. You seem to be bucking that trend. What gives you confidence that you can grow those volumes this year, even with all the question marks and the rising risks of recession?
Yeah, Morgan, good morning, and thanks for having us. Our employees delivered an outstanding year last year. You saw the numbers, $6 billion of profit on a little less than $15 billion of revenue. But if you look for 2023, we're optimistic because our service levels, our staffing levels give us the capacity and the confidence. The things that we can control and influence are setting up really nicely for the year. And we're off to a really good start in January. When you look at the business overall, intermodal business from an international perspective is definitely down, and we see some softness in the first half of this year for that part of the business. But there is strength in our business, like in automotive, like in the coal business. And actually what we saw, Morgan, in the second half of last year, boxcar orders started coming down, pretty rapidly actually between September, October, November, December. But in December and January, we're starting to see those orders come back up. And so we're able to meet those orders now with our capacity and the great operating performance our team is delivering.
So given the fact that as a railroad, your company is touching so many different goods that move across the country, does that suggest from your standpoint that we could be actually from a macro standpoint in for a soft landing this year?
Well, it's hard to say. That's what you've heard from a number of our colleagues as well, is that it's really hard to predict what's going to happen in 2023. We're actually very optimistic about January. We've seen a very strong start to the year, so that's a good sign. And as I said, we've seen boxcar orders come back a little bit in December and January, which is also another good sign. There is a lot of uncertainty out there, and that's why you're not getting a lot of guidance for 2023 because of that uncertainty. But we believe there's a roadmap out there that we can deliver volume growth this year, largely on the back of our increased performance and capacity, and beyond just revenue growth, but actually volume growth, which has been hard to do over the last several years, but we're positioned well to do that.
Yeah, and you talk about the recovery in service and what that means in terms of labor and the fact that you've been able to hire. Do you feel right-sized from a workforce standpoint?
Yeah, we do, Morgan. We actually reached the 7,000 T&E number, which are the engineers and conductors that actually run the locomotives. We reached that number at the end of December, early January, which was our target. We'll continue to grow by maybe 200 to 300 more throughout the rest of the several months here to get ready for the summer season when there's more absenteeism. But we feel really good about where we are. It took a while to get here, to be honest, but we're actually in really good shape now. And we're delivering service numbers to our customers that we haven't seen a bit before pre-pandemic levels, and sometimes better than we've ever seen. So we're feeling really good about our performance, our capacity, and our ability to serve our customers.
Hey, Joe, you make a really good point about sort of the way companies are communicating right now, at least to the street, meaning there's no upside to promise much of anything at the moment. But I wonder, when you talk to your customers, if they were being perfectly candid in terms of, say, back half of the year order trends, would they be more constructive than we're hearing them?
I think that possibility exists, Carl. I think, I'm looking at what's happened in December and January and seeing a little bit of movement upward in boxcar orders, which I think is a good sign. There's so many different conflicting data points that you guys reference all the time in your show that we're all trying to figure out exactly what's happening. Our chemicals business, our plastics business is a little bit soft. International intermodal is soft. But then we're seeing strength in auto production. We're also seeing strength in coal. And we're seeing other parts of the business that come back a little bit, like aggregates and stuff. Forest products a little bit slower, which involves housing. So it's a mixed bag. But some parts of our business certainly are optimistic about the year. And while we're watching those intermodal shipments, especially to see what's happening with retail, that part we have to watch and see. But I think on the bulk side and the carload side, we could see a pretty good year.
Joe, are we getting a clean read on actual end demand, kind of free of the supply chain and double ordering kind of noise that we were dealing with for a while? You mentioned the service levels you're able to deliver for your customer. Are we now beyond those potential distortions?
I think from a CSX perspective, we are. I mean, we're actually now fulfilling a lot higher percentage of the carload orders that we're receiving than we were last year, for example. We still can't meet all the demand, but we're a much higher percentage, for example. And again, as I said, we're seeing mixed parts of the economy show us. Obviously, in the rail industry, we see it early, right? We see the intermodal shipments slowing. We see other parts of the economy starting to slow. That's why we started seeing that in the summer of last year, up through the fall, and then really accelerating into the early winter. But now we're seeing some of that recover. So I think that's a possible good sign. But yet, there's a lot of uncertainty out there, as you know. What goes on with retail is one of those uncertainties. But we're feeling good about our business from the things we can control right now, and we're set up for a good year if of course, the economy supports that.
Yeah. In terms of the intermodal piece of the puzzle, and I know you've already touched on it a little bit, but we have seen a lot of that international container shipping traffic come to the East Coast from the West Coast. That seems to be persisting given the uncertainty around labor talks happening at the ports on the West Coast too. That increased market share, is that something likely to last on the East Coast?
I think it can, yes. I mean, obviously the New York, New Jersey port has been the #1 port for the last several months, and that can continue. There's been some rerouting of things. Obviously, it benefits the East Coast Railroad, so we're appreciative of that. We have a strong international intermodal franchise, and so that's why we've been a little bit more pronounced in our drop in intermodal, but we see opportunity as things come back perhaps in the second half of the year. But there's a lot of uncertainty on the West Coast ports. I'm hearing that there's good talks going on. Obviously, we're not in the West Coast, but we feel good about where the East Coast ports are. There's investments going in all the way down in the Gulf, all the way up through East Coast, and we see lots of capacity coming online to help support the growth in the future.
All right, Joe Hinrichs, thanks for joining us today. I have to say, probably the best live shot of the day, standing in front of a CSX train. Thanks for being with us.
Yeah, thank you. Appreciate it. Have a good day.
As we go to break, Sherwin-Williams with these mixed results, though guidance came in well below estimates. Leadership sees a lot of headwinds, including pressure in housing, of course. Stock had a rough open, got down to about 244, below today, 219. But currently at these levels, about a 2-week low. Stay with us.
Son, I think it's time we talk about your future.
I want to be an insurance mascot, just like you.
Yeah, but times have changed. People want more from their insurance company.
But you said to follow my dreams.
What about something more realistic, like professional sports?
That's so basic.
Some insurance companies are known for their mascots.
Kids' birthday parties.
Dad!
NJM is different. We're known for a claims experience that makes our customers happy. No jingles or mascots, just great insurance. NJM.
What's up, Einstein?
My network has gone kaput.
You tried to save a buck on it?
I got what I paid for. Not so smart.
Nah, you're still a genius. But there is a smarter way to save. Oh. Switch to Verizon. For a limited time, get Welcome Unlimited for just $25 a line.
$25?
And it's guaranteed for 3 years.
Brilliant!
Well, you would know.
I'm switching.
I think the bike's probably faster.
Now is the best time to switch to Verizon for just $25 a line, guaranteed for 3 years. The savings will last on the network you want. Verizon.
Emotion, especially panic, has no place in investing. When we panic, we don't think clearly, and that leads to mistakes. If you associate your stock's value with the price a stranger throws at it, it's easy to panic when the bid is low. When volatility strikes, focus more on its value than the price being put on it. Keep a level head, make rational decisions, and perhaps realize there'll be a better time to sell.
Get Jim Cramer's complete guide to investing for free. Scan the code or go to cnbc.com/Kramer Guide.
I don't hear anything anymore.
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-571-7900 or visit coventrydirect.com.
My plane has a mechanical problem. I'll try to get there as soon as I can.
Breakfast looks delicious, as always.
Having a chauffeur car plane side helped keep me on schedule. Hi, Jeff. With all the plane shortages, did you have trouble finding one?
I never have any trouble. I simply pick a plane, pay, and I'm ready to badge it to my destination.
Are there any taxis around? I'm really late for my meeting.
Do we have a deal? Missed you at the meeting today. Badge it and don't miss out on the most important moments of your life.
$30,000 flight credit with new membership.
Shark Tank. Tonight starting 7 Eastern, CNBC.
What's it like? Always knowing the truth.
I could just tell.
When anyone is lying.
I think there's been a murder. I'm trying to figure out what happened.
You ever gamble? Because you can make a killing.
Nah.
Welcome back. Northrop Grumman topping estimates as revenue soared 16% in the fourth quarter, 3% growth for 2022 overall. And the maker of the B-21 bomber raising 2023 sales guidance to almost 5%, growth of 5%, which among the defense primes actually makes it an industry leader. Free cash flow also climbing at over 20% CAGR through 2025. That's the forecast. CFO Dave Keffer telling me that the 2023 guidance is the result of strong financial momentum from Q4, easing labor shortages as Northrop hired 6,000 net new employees last year, a supply chain that's still challenging but not getting worse, and more demand as the $79 billion backlog nears the company's previous record high. The space business, again, the bright spot. Now Northrop's largest segment. Double-digit sales growth expected to continue this year. The ground-based strategic deterrent, this is the nuclear modernization program to replace the Minuteman ICBMs. That is fueling the growth there, but Keffer also saying that the strength is actually, quote, broad-based. Missile tracking, surveillance and reconnaissance, satellite constellation capabilities, some of those areas to name a few. Regarding future defense spending, because investors have been very focused on this, especially given congressional gridlock over the future of the U.S. budget. Keffer adding that, quote, the global threat environment these days continues to be as active as ever, and that's what will drive the rate of growth in defense and national security spending, both in the U.S. and internationally. By the way, not just tied to Ukraine, but also across NATO and in Asia as well. After our conversation, Northrop also disclosing a DOJ criminal subpoena seeking information on financial and cost accounting and controls. This is tied to, or believed to be tied to, interest rate assumptions used to determine its pension expenses. Northrop saying that the underlying issue was first disclosed back in 2020, so we'll continue to keep an eye on that. But overall, a real bright spot in an otherwise flat to down year for the broader defense sector at large, and you can see that with shares up almost 1% right now. Carl?
Fascinating week in defense, no question about that. Coming up after the break, the blowback to some of these buybacks with DC going after Chevron after the $75 billion stock buyback. We'll talk about that as the Dow's return to the green. Back at 2.
your blackjack games. You got Spanish 21, vacation blackjack, touchdown blackjack. What is this? Some big old Vegas buffet where you're putting the waffles next to the crab legs, deciding what dessert you want for breakfast? Well, guess what? Smack me in the mouth with all of them. I want it all.
Download the DraftKings Casino app, the home of blackjack, and get a deposit match up to $2K in casino bonus funds. Action's so good, why play anywhere else?
Somebody bring me the cream puffs.
What can a nationwide 5G network from T-Mobile for Business do for your business? Unlock new insights and efficiency right now. Allow monitoring of productivity at remote job sites with next-generation bandwidth. Enable AI cameras that spot factory issues in real time using next-generation speed. And deliver ultra-capacity 5G coverage that's years ahead of the competition. T-Mobile for Business has 5G that's ready right now.
So you are breaking up with me?
Oh, yeah.
Please do not tell me it is the Pulse Puffin.
Actually, it's NJM.
Wow. They don't even have a mascot.
That's kind of the point.
Ouch. Well, I am not paying for dinner.
Well, I'm saving money with NJM, so that's fine.
This year, upgrade to NJM and see how much you could save. Mascots, just great insurance. NJM. Get a quote today.
Emotion, especially panic, has no place in investing. When we panic, we don't think clearly, and that leads to mistakes. If you associate your stock's value with the price a stranger throws at it, it's easy to panic when the bid is low. When volatility strikes, focus more on its value than the price being put on it. Keep a level head, make rational decisions, and perhaps realize there'll be a better time to sell.
Get Jim Cramer's complete guide to investing for free. Scan the code or go to cnbc.com/Kramer.
Welcome back. Some breaking news in Washington today regarding a notorious ransomware gang. Our Eamon Javers has the latest. Morning, Eamon.
Good morning, Carl. Take a live look now over at the Department of Justice. We are awaiting a press conference here. We expect to see the Attorney General, Merrick Garland, also the FBI Director, Christopher Wray, step up to that podium in the next couple of minutes and tell us about a takedown that happened apparently overnight of the Hive ransomware group. That is a particularly pernicious ransomware group that the FBI says had stolen as much as $100 million from more than 1,000 companies, and particularly in the healthcare sector, which is what made this group such a target for law enforcement, shutting down healthcare providers with ransomware and demanding payments to release that money. That's seen as particularly cruel by these ransomware actors, given that there are patients with health care situations on the line. We expect to see this announcement coming up in the next couple of minutes, a massive international coalition involved here. Take a look here at this graphic, which shows you if you go to the Hive ransomware site on the dark web right now, this is what you see. You're expecting to see ransomware details on the dark web from Hive. Instead, you see this site which says, this hidden site has been seized, and the seal of the Department of Justice, the FBI, the Secret Service, and a whole host of international law enforcement agencies. That's all there. That site has been owned by international law enforcement, and we'll get the details here, Morgan, in a couple of minutes from the Department of Justice and FBI on exactly how this takedown went down, whether there are any arrests here, and how much money has been recovered, if any. Back over to you.
And we know you will bring us all of those details. Eamon Javers,
right.
Thank you.
You bet.
Energy giant Chevron getting a nice boost after announcing a $75 billion stock buyback program and also a dividend hike. This, of course, ahead of earnings tomorrow. Stock's up about 4% right now. Our Bob Pisani has more on the rise of corporate buybacks over the last few years. Bob.
Yeah, this is just the latest in a whole series of buyback announcements. You know, Chevron's the talk of Wall Street and Washington this morning because of its massive share repurchase program. $75 billion announced last night. Now, they increased the dividend 6.3% as well and announced the $75 billion buyback. With a market cap of $346 billion, a $75 billion buyback, that's about 20% of the shares outstanding. That is a lot of shares to buy back if it's fully implemented. Buybacks have become an important part of returning shareholder profits. Last year, about $980 billion was spent on buybacks for companies in the S&P 500. About $560 billion was spent on dividends. So you see a lot more buybacks than dividend these days. Why? Wall Street loves buybacks for two reasons. It provides immediate gratification because the company is buying shares on the open market, and everyone can see that. And the buyback can be adjusted down if the cash flow declines. Dividends, by contrast,
are much stickier. But there's a big problem with buybacks. They are supposed to reduce the share count to improve earnings per share. But in many instances, there is no share count reduction because the companies issue new shares as options to executives and also issue more shares for M&A activity. Some companies really do reduce their share count. Some oil companies, for example, like Marathon Petroleum and Marathon Oil, look at the share count reduction. This is the third quarter last year. They were big buyback monsters, along with some of the big financials last year were very active reducing share count. AIG, Wells Fargo, Morgan Stanley, for example, have also been actively reducing their share count. The one thing I would emphasize to everyone, last year Wall Street spent $1 trillion to buy back stock, and the overall share count didn't go down. Mike, we talked about this many times, even counting Amazon, Tesla share splits, they keep increasing the share count on the other side, so it's a gigantic merry-go-round, a hamster wheel, essentially, and that certainly is due for criticism. I've been saying it for many, many years. That's the big problem I've got with this.
Yeah, filling and draining the tub at the same time.
Exactly.
Don't go anywhere, Bob. We want to turn to our Kayla Tausche in Washington looking at the D.C. response to all of this. Hey, Kayla.
Hey, Carl. Well, the White House sees the Chevron buyback in particular as further proof that these oil companies aren't using their capital to increase production or lower prices further for consumers, again calling on them to do just that. A White House spokesman saying for a company that claimed not too long ago that it was, quote, working hard to increase oil production, handing out $75 billion to executives and wealthy shareholders sure is an odd way to show it. Chevron CEO Mike Wirth visited the White House twice last year, meetings requested by the companies, not the administration, according to my sources. Officials said dividends and buybacks were discussed in those meetings, but no policy agreement was reached between the parties. Chevron could not be reached this morning for comment. But Chevron is a component of the Dow and the S&P 500, making it an incredibly widely held stock, even among members of the administration and lawmakers. But the White House tells me that doesn't change its viewpoint on this matter. In the last year, portfolios touching 2 Democrats and 8 Republicans traded Chevron stock directly, a total of 30 times, 22 sells and 8 buys, according to Capital Trades. President Biden is set to speak on what the White House sees as an improving overall economy this afternoon. Remains to be seen whether Mr. Biden will renew his personal attack on the oil industry with prices down so significantly from their June peak. But certainly, guys, the messaging strategy from the White House is not letting up.
Yeah, and Kayla, you wouldn't expect it to. It obviously seems like it would be a winner. $75 billion certainly sounds like a big number. It is a lot of money. People still have this kind of raw nerve about gasoline prices. On the other hand, you know, Chevron's so profitable, it probably doesn't really impact them. And what's interesting, too, is we now have a tax on buybacks, right? So we'll see if in fact, that acts as a deterrent or ever was meant to.
Yeah, there is a 1% tax on buybacks, and that is seen as sort of a placeholder of sort for Democrats. If they're trying to raise revenue in the future, perhaps that's a vehicle that they could just increase that number slowly and go a little bit more up the scale. But certainly buybacks were also part of the legislation during the pandemic for the rescue programs. They did not want executives to be receiving this money to shore up their balance sheets, only to be buying back stock or increasing dividends during those uncertain times. Certainly now is very different, but there are specific industries that are going to remain under the microscope and for these very clear reasons.
Yeah, Bob, that 1% excise tax was exactly where I was going with this. And whether after a record year for buybacks in 2022, that's going to put any kind of dent, and maybe perhaps not, looking at Chevron's announcement last 24 hours, any kind of dent on buyback activity this year, especially if you are concerned about a recession and
I am not in the camp to think that this is going to somehow deter buybacks. It is about cash flow. It's always about the cash flow. Who's doing the big buybacks? Oil companies. Who's got big cash flow? Oil companies. Did you see some of the big financials too that are announcing it?
Yep.
Buyback. They're not going to be deterred by a 1%. If they have the cash flow, they'll do that because that's the best way for them to return money to shareholders, because they don't want to do dividend increases. Again, I'm going to keep pounding the table on this. Old school people want dividends, cash in hand, not some vague promise, oh, we're going to reduce the share count, and then it doesn't end up happening in the long run. That's what I'd like to see, more pressure from shareholders for dividends and not just buying back
Although
stock.
the historic the critique of buybacks, Mike, has been if you're buying back stock, you literally have no ideas of what else to do with your cash.
Right. Well, or there's so much to go around, and I think that's the case with Chevron. It's not as if do we buy back this much stock or do we invest an equivalent amount in new drilling and then capital expenditures. There is enough to go around. The cash flow at Chevron last year was triple what it was 6 years ago. So it's not as if it's an either or. I also do think there's no magic for your stock price. The heavy buyback stocks have not necessarily consistently outperformed. They've just soaked up the share issuance and essentially become compensation to employees by other means.
Many are not reducing the share count. That's the bottom line. If you can't get the EPS up because of what is the purpose of it? You're in the hamster wheel, giving money options out to executives and doing M&A activity. So I'm not against M&A activity. I'm just saying let's find another way to distribute the profits from companies that have great cash flow. A better way is dividends.
All right. Well, we're going to leave the conversation there. Thank you to Bob Sani and Kayla Tausche. After the break, do not miss our interview with former Barclays chief Bob Diamond on today's GDP read. But first, check out shares of Dow, the chemical company missing on earnings hurt by higher energy costs and weaker demand. Also announcing it will cut around 2,000 jobs. That's about 5% of its overall workforce. Stocks down about 1%. Worth noting those layoffs, because so far we've seen so many of them announced in tech, and now here you have another sector where you're seeing more cost cutting. We'll be right back.
I'm Dr. Tina Tan, Assistant Commissioner of the New Jersey Department of Health and State Epidemiologist. COVID-19 is still with us and constantly changing. That's why we're recommending that everyone 6 months and older get an updated booster shot. The new booster offers the best protection against the most recent strains of COVID-19. It's free, widely available, and you can even get your flu shot at the same time. So protect yourself and others from serious illness. Get boosted. Learn more at covid19.nj.gov.
Olive Garden's never-ending first course is always on us with every delicious entree. Garden fresh salad, on us. Homemade soup, on us. Now as for the breadsticks, who are we kidding? They're on us too. Only at Olive Garden.
92% of households that kick off the year with Peloton are still active a year later? Yeah, actively using it as a eventually.
Seriously? 92%.
92% stick with it. So can you. Start a 30-day home trial today. Terms apply.
Women Talking is unlike any film you've seen before. We do not forget these men. We forfeit our place in heaven. And now it's been nominated for the Academy Award for Best Adapted Screenplay. And the Best Picture of the Year. Women Talking. Rated PG-13.
With no money down, no monthly payments, and no interest for 1 year. This offer ends January 31st. For a free appointment with Renewal by Anderson, call 1-800-918-0808.
Hunger Root is here. I'm gonna open the box.
Appreciate your stock's value with the price a stranger throws at it. It's easy to panic when the bid is low. When volatility strikes, focus more on its value than the price being put on it. Keep a level head, make rational decisions, and perhaps realize there'll be a better time to sell.
Get Jim Cramer's complete guide to investing for free. Scan the code or go to cnbc.com/Cramer Guide.
Markets here trying to circle around, say, 40-35 after a lot of data came out today, including GDP. 6 months of solid growth despite some of these widespread recession fears. Our next guest says we are in a recession, but it will prove to be mild. Joining us this morning, former Barclays Chief Executive Bob Diamond, now Atlas Merchant Capital CEO and founding partner. Bob, it's great to see you again. Thanks for the time this morning.
Good to be here, Carl.
So on the one hand, people are dissecting GDP, obviously a huge impact from inventories. We're shaking our head again at jobless claims at 186. What do you think this last print told us about the end of last year?
Well, listen, it was certainly a surprise to the upside, but if you and I sit here and think back 9 or 10 months to an environment with absolutely raging inflation, close to double digits, in less than a year, we've had 450 basis points of rate increases. We have mortgage rates 2 to 3 times the levels that they were less than a year ago. And to be thinking we have this kind of a print in fourth quarter GNP, and the kind of labor market that we have today, I don't think we would have believed it. So we do believe that recession is a correction in the economy and clearly was necessary, but we think it will be mild and potentially longer, over a year and a half, as opposed to 2009, which was short but very, very sharp and very, very deep. So everything indicates that this is going to be a mild correction as opposed to deep and dark.
But it sounds like you think mild in severity, but maybe not necessarily in duration?
Yeah, I mean, I think we really have to sit back and consider just what I said. 450 basis points higher in rates from less than a year ago. I think the economy is going to take a little bit of time to adjust to that. There's some positives to having a more normalized interest rates, more normalized curve, particularly for financial services. But the economy is going to take a while, and I think inflation has peaked. It seems more mild in terms of the correction. I agree. But I think 2023 will still have a lot of challenges for the economy.
So then, Bob, the fact that markets are pricing in that the Fed will cut rates in the second half of this year, your thoughts on that?
No, I mean, zero chance. I think before the fourth quarter print, Morgan, I would have said that, it's a very, very high hurdle for the Fed to reverse course. I do think one or two more 25 basis point increases are likely, something like that, and a long period of pause and watch and see how it goes. But I think with the numbers that just came out on the fourth quarter, there's zero chance that we're going to see rate decreases this year. I don't think we're going to see them anyway, even before that print. I think the odds are even lower now.
Bob, if we don't see the Fed easing later this year, it would suggest that the overall economy would have probably grown accustomed to a higher level of the cost of capital, wouldn't it? I mean, you have record bond issuance in the first few weeks of January. Clearly, both sides of the trade are okay with, paying 5+% if you're investment grade and then getting that if you're an investor in it. So I just wonder what that means for capital markets, for valuations, and if the economy can withstand this over longer term.
Absolutely, and I think